Hi guys. How are you doing today? How is your trading day? You want to hear about mine? I would actually rather forget about mine. You know, on an average trading day, actually on an average trading week, I would usually have one losing day and 4 winners. It's approximately the same this week. I had 2 fantastic days, over 11 grand or so, but today I gave back like about a third of my weekly earnings. So I'm going to finish this week up approximately $7,000. I can't complain, it's great, but I gave back $3,300 today. I had 7 trades, 2 winners, 5 losers. Ouch. I see some winners here. How's your day? I mean, up and down. $1,800 is great. Good job. Yeah, it's a part of the game. I hate this part, but still is a part of the game. It has been a very, I would say, a bit of a tough day, a strange day, I would say, really, because we started with a very big gap down today, and I was expecting the gap and go. I expected the gap to continue down. That's why I was kind of caught losing money today. I was expecting the market to come down. So my only 2 winners are the long. Hold on. No, I actually had the 1 short winner in Baba and 1 long winner in Roku. So Roku came in after the market was finally moving higher over the highs. 7 winners, 2 losers. Good job, Sean. Up $167. Yeah, well. I'm waiting here for Scott to join us. And hold on a second. Just a second, please. Okay. I do not see Scott's request here. Any questions, traders, something you want me to answer? And I am waiting for Scott. So Scott, if you hear me, are you about to send me a request to join? I think you do. Hold on a second. But somehow I can't reach that. Hold on, Scott, I just saw something coming up from you, but I'm touching it and it just doesn't, hold on. I'm struggling here, traders, I'm struggling here. trying to accept this request from Scott because I want to have Scott on our in here too, but that doesn't seem to be clicking. For some reason. Scott, can you send the request again? I don't know why I can't click that. It's unclickable. Here it comes again, but it's still unclickable. Sorry, can't get Scott aboard. It's not going to work out today. So let's continue without him. So anyway, we do have some questions you guys are interested in asking, and I'm here to answer. Plus, we also have this issue about the questions we want to ask you, because we have some vouchers to give you today. Those of you who answer the questions correctly. We prepared some vouchers for some of our questions. So if you're ready, we could go along with that very soon. Clifton, are you ready with the questions we had? Let me know if you are, and we'll start from there. Because the first one is going to answer the question correctly is going to get a $250 voucher from us. We have our intro program, which costs $500, or any other program which you could use a $250 voucher to join. And again, I'm trying to, hold on a second. Still trying to get Scott aboard. No, can't do that. Just can't do that. Okay, it's not getting there. I'm giving up. So, question number one. Let's start with the questions here. And again, the rule goes like this. The first person who answers the questions get a $250 voucher. And it has to be, of course, a correct answer to the question. So let's start with question number one. Clifton here from our trade and support is here to help me. And then we'll go through your answers and see who gave us the first question, the first correct question. Clifton, you can post the question, please, if you may. Are you here with us? Here we go. No, not yet. Another request from Scott, but it's not together. Okay, question number one. What is the most common indicator used to follow the market volatility? Not VWAP, not VWAP, not SPY, not VIC, not VWAP, not VWAP. We've got a winner. Ingrahameli, if I pronounce your name is correct, that's the right answer. So, Clifton, please notice we do have a winner. Ingrahamlee, Ingrahameli, if I pronounced your name correctly. So that is correct. The VIX is the volatility index. This is what we're using in order to watch market volatility. It's a very important index. It can be traded too. It does have an ETF that you can trade. I personally don't trade it. Now, I'm not talking about the VIX here in order to teach you how to trade it. Actually, I would, the lesson, if I have to give you a lesson about the VIX, is watch it, because it's a very important indicator to talk about, to understand market volatility. but never ever trade it. Don't get close to it. Don't touch it. You can trade the ETF. It's called VXX. Don't touch it. Don't trade it. Don't do that. It's a very, very dangerous ETF to trade. So best advice I can give you, just don't get any close to that. So we do have the first person who gave us the right answer. We do have a first winner for a $250 voucher. And just please contact Clifton here. And he does have the screen recorded as it says here. And he's going to contact you guys and give you the voucher. And keep contacting. I mean, we're going to give you it somehow. I mean, Clifton's going to take care of this. Okay, Clifton, we're ready for the second question. We do have, I believe, 5 questions. So here comes question number 2. Get ready. You just write the answer here. You got the first one who answered the question gets a $250 voucher, but you just write the answer right here. You don't have to send it anywhere. Here's question number 2. What is the name of the most commonly used German and French market indexes? Like in the US, the most important one would be the S&P 500, right? Well, you got the first one right. It's called DAX, but I'm looking for the person who will give me 2. You have to write in your answer 2 indexes. You have to write DAX, comma, something X. And we do have a winner. That's true. We have the CAC and the DAX. That is true. I was looking for the first person to to write that down. We've got Fabian Ryo, if I mention your Fabian, maybe, I don't know. Did I pronounce your name correctly? I think you're French, so you should know. And he does know. And it is the CAC and the DAX. So those of you who said DAX, you're absolutely right. That's the German index, which is the most important index. But there's also the CAC, and I was waiting for 2 answers together, and we do have a winner. Thank you very much. Now, short lesson about this. I do have another request here from Scott, so hold on a second. Maybe I can get to this one now. Again, I'm just trying to make another attempt here. So hold on a second. No, I can't. That's not going to work. I'm giving up on this. Just a second, please. So, why do we watch these market indexes? We watch market indexes because they are very, very important for us as traders. Why do we care about the German index? Why do we care about the French index? Before we start the trading day, make a habit. Always go to always watch the international indexes. Always watch international indexes. Probably the first thing I do before I start trading. Now, I do come to the market and I'm watching the S&P 500, and I can see that, for example, the S&P 500, like today, started down 0.8% or something like that. So, but what did the other indexes do? Did they come down stronger than this? Like, for example, Chinese markets down dramatically today, pre-market, and the rest of the markets too. So watch the other indexes too. Now, S&P 500 started today down, but it's only down now 0.6 approximately. So it's only down 0.6. Other world indexes are down dramatically. So usually, when you see the other world indexes down dramatically, and you shouldn't just watch the DAX and the French, you should watch all the rest. But when you have all the other indexes down dramatically and the S&P starts at 0.8 and moves up, moving up, and then only 0.6, and maybe even continue, it's not likely that it will stay like that. It's more likely that it will come down because world indexes were lower. So that's why you should be watching the world indexes in order to know, to expect what may happen to the S&P 500. And what counts is what happens to the S&P 500. We are trading with the S&P 500 because that's the main tool that institutional traders are using. And when we're trading stocks that are over $10 and over 1 million shares a day, The main tool that we use is the S&P 500, but in order to understand the S&P 500, you need to understand the world indexes and watch it, before the market starts, to understand where we're going. Okay, hold on a second. I'll try to invite Scott here because I think there's a way to do that. And no, not this one. Hold on. Yeah, I've got these two icons which I'm supposed to be clicking and then inviting somebody, and Scott was supposed to join us. The problem is I'm clicking these icons and I'm clicking the request, and it just doesn't go through. And that is to the TradeNet manager who just asked me why I'm not inviting Scott now. So sorry, Scott. You stay away from this video. Okay, so we've got 2 winners for 2 questions. We still have another 3 questions to ask. So here comes the third question. Question number 3. Clifton, you may post that one now. And let's see who's the winner. You've got to provide us the full answer, and the first one to provide an answer is going to get a $250 voucher from TradeNet, which you can use in order to join our services. So, waiting for question number 3 to pop up, and here comes question number 3. What is the most common Chinese market ETF? If we want to trade the Chinese market, what would be the Chinese market ETF that we're trading? Like buying Shanghai index is true, but we don't trade that one. That would be I'm talking about the ETF. The SPY is the S&P 500. Shenzhen index, that's correct, but we're not trading it, and we do have a winner. The first one to answer is GKED09. Thank you very much for your answer. And I mean, like a second later, we've got several other winners. The ETF of the Chinese market is the FXI. So if you guys are interested in trading the Chinese market, you can't trade the Shenzhen index. You can trade it. It's just shown on your screens. But if you want to trade an ETF, which is traded like a stock, which is coming up and down like a stock, would be the FXI. The FXI is an ETF. You can buy it, you can sell it. It has buyers. It has sellers. It has a level 2. It has a time and sale. So you can actually trade it. Now, I'm trying to get this not only questions and answer. I'm trying to explain something about ETFs here. I personally don't trade ETFs. Is that something that you shouldn't do as well? Not necessarily. I don't trade ETFs unless I have some very big days. Now, today, for example, Chinese market is coming down dramatically. Actually, let me click on the FXI. Hold on a second here. FXI is down now 1.6%. So compared to the market, and it's actually moving up, so it was much worse earlier. So you could trade the Chinese market on a day like today because it's going to be very volatile and because there's a story behind it. I wasn't expecting it to go up, I have to say, but it doesn't matter if I was expecting it or not. The thing is, trade ETFs on very volatile days. Usually, you shouldn't trade them. You should trade a stock or different stocks, because a stock, when it's coming out with a story, has a big issue with fear and greed. It's either moving up strong or coming down strong. So when you trade stocks, the volatility will help you. It comes with a story. The FXI does come with a story today. Chinese sales in February are down 20% compared to last year. I don't know if you understand what I'm saying here. I mean, if something like that would have happened in the USA, like 20% down on sales from February last year, you could have a worst nightmare that you had in 2008. Seriously. So I was expecting worst market. I was expecting the market to crash today. That doesn't happen for some reason. But the thing is, you can trade ETFs on very volatile day. Don't try and touch them during normal so-called days. In my opinion, it's better to trade the stocks, not the ETFs. Okay, so it's not just about getting these $250 vouchers. Clifton, we're ready for question number 4, and we do have 5 questions altogether. So we've got 2 more questions. It's not another ETF question, but Clifton, you can go up with the next question. And guys, again, the winner, the one who writes the first, gives us the answer, the first answer, gets a $250 voucher from TradeNet, and Clifton will make sure that you guys get it. And we have 3 winners till now. We're looking for another 2 winners. And Clifton's ready now for the next and 4th question. We do have 5. So focus now. Here comes number 4, real soon. Again, first person to provide a correct answer is going to get a $250 voucher. So here comes question number 4. What does the VWAP stand for? Full name of the VWAP. Write it down. VWAP. What does it stand for? VWAP. Wow, we have a quick winner now. But I'm sorry, you're not going to get your prize because it's... Okay. The same winner who won the first question. Clifton, what are we going to do about that? I mean, the guy won twice. We should have had a rule that you can't win twice. We didn't say. What are we going to do about this? Clifton, come up with a solution now. I can't deny it. You're going to get it, son. You're going to get. We should have had a rule you can't win twice. We should have said that. You won again, you're going to get one more. Our mistake. But we're also going to give another voucher to the second winner because answer number 1, the first answer, was answered by our first winner today. And we're going to start the rule, but this rule is going to be from the next question only. So you guys who won the second time, you're going to get 2 vouchers, which you can definitely use. And now I'm looking for the second winner. The guy after just wrote volume weight average, but not, you missed the P. Volume weight average price. And then comes the number 3, so we do have another winner here, which is JRMC Dermot, if I got your name right. So we actually have 2 winners here. The first person who answered, and the first person and the second person who answered. So we do have 2 winners here. And before we start with number 5, we do have a new rule now. You cannot win again. And since we did not say that earlier, we have 2 winners now. Let's talk a little bit about the VWAP. Guys, the VWAP is probably the most important indicator out there. The most important indicator out there. Volume weight average price. And you know what? It's the only one I'm watching. You should watch more indicators. I teach my students to watch plenty indicators. The reason you should watch more indicators is because they are important. There's many of them that are being watched by institutional traders and so on. You should be watching indicators like moving averages and more. Why don't I? Because I'm trading for almost 20 years. And after trading for maybe 7 or 8 years, I stopped using most of my indicators, and throughout the years I stopped using more and more. The only one I'm still watching is VWAP. Now I don't need to watch them, it's embedded in my mind, seriously. When I watch the charts now, I know where the moving average. I don't need the moving average to be on my chart. So I'm really enjoying a clear looking chart without too many lines, and I don't need them anymore. You do. I mean, if you're trading for your first 1, 2, 3 years, you do. If you trade as long as I do, you don't. But VWAP, I'm still watching. Why do I watch the VWAP? Because it's a little bit more complicated to calculate in my hand, and it's a very important indicator. Volume weighted average price is the tool that determines how much money are the institutional traders who are clicking the button are making. So if these guys are buying stocks below the VWAP, they're getting extra income. If they're buying stocks over the VWAP, they will fire them. Their boss will fire them. If they're supposed to be selling stocks, they will sell above the VWAP. Now take a good look. Take a good look at the VWAP. Because when a stock is over the VWAP, then it's usually going to come down. When it's under the VWAP, it's usually going to come up. Is that the only indicator you should be watching? No. There is a lesson I made in YouTube about VWAP. So search for my name, Meir Barak, and VWAP and YouTube, and you'll find it. So it's an important indicator to watch. It's an important indicator to learn, and I'm not going to continue talking about it right now, but you should be watching it. You should be watching it. Okay, so are you guys ready for number 5? Question number 5. We're just about to post the last question for today, and that will conclude our meeting today. Hold on a second. We're getting ready for question number 5. And Ori just wrote me something about a code you should be sending. I have no idea what you're talking about, Ori. But if you can explain it in one sentence or a few sentences so I can understand what you're talking about, I have no idea what you're talking about. Okay, so we're ready for question number 5. Now, we can't have the same person as a winner. We do have several winners till now. We can't have, you can't, please don't join the one who already answered the right question, if you know the answer. Okay, Clifton, are we ready for question number 5? The concluding question for a $250 voucher with the new rule that you can't win it twice. We're coming with the next question very soon. Here we go. Get ready. Question number 5. What are the 3 most important EMA and MA to be used on a daily chart? I need 3 numbers. 3 numbers plus, it's not enough, 3 numbers plus which one is an MA, which one is an EMA. So I've got one which is almost correct, but I need it to be completed. Which one is an MA, which one is an EMA? Because some are MA, some are EMA. Cool. I've got my first winner here, which is Philly FZHU. 200-day simple moving average, 20 and 50 EMA. I believe you are the first. We've got plenty of answers of 20, 50, and 200, which are all correct, but without the full answer. Sorry for that, guys. So let me see if I missed any. No, you are the only winner we have. The first winner that we have, and probably so far the only one. So yeah, the answer is 200 simple moving average, which is hugely important. Guys, moving averages are very important for trading, no doubt about that. When you watch a daily chart, you should be watching 3 important moving averages. 20 and 50 are the most commonly used moving average. But they are used EMA, exponential moving average. If you're not familiar with what I'm talking about, search it. I'm not going to do a course right now. But EMAs 20 and 50 are very important. They should be support or resistance depending if the stock is trending higher or trending lower. So 20 and 50 are very important. and 200. But the 200 is a simple moving average. And again, for some strange people, some strange reason, most people are using 200 simple moving average and 20 and 50 exponential moving average. Now the thing is, it's a self-fulfilling prophecy. I don't care why they use them. I don't care how they came up to these numbers. If you look at Apple and if you feel like 30 moving average works better for you, you're wrong, because most people are watching 20, 50 and 200. So the stock will probably get supported at 20 and 50 if it moves for example, it's moving higher. 200, it's for also for daily. They would use a lot of 200, but it would be simple moving average, and that's what most people use. And when most people use something, you should be using the same, because that's a self-fulfilling prophecy. Actually, everything that has to do with technical analysis, in my opinion, is just self-fulfilling prophecy. But it works because people are using it. Guys, at this point we conclude our questions for today. And I really want to thank you very much for being here with us today. I enjoyed it. So hopefully you did too. We have 6 winners, from which 2 of them are the same person. But we didn't come out with the rule early enough, so we've got 1 winner with 2, so that's okay. We're going to keep on doing that, so hold on to the next times we're going to announce it. We're going to come out with winners in some other Instagram live that we're going to have in the future. Glad you enjoyed it. I enjoyed it myself. The only thing I did not enjoy today is the fact that I'm red for the day. But that's a part of the game, isn't it? Have fun, traders. I'm going to end this video right now, and enjoy your weekend. If you traded with me today, this week, I mean, it was a great week, and you enjoy a great week, and enjoy a great weekend. I'll see you in our training room next week, and don't forget to join us for a free 14-day trial. You could probably swipe up later or now, or look at the bio, and we'll see there. And I want to thank you very much too for giving us the 10,000 followers on Instagram that we just reached this week, and yeah, thank you. So yeah, you can definitely watch this video after it comes up and swipe up. So we're going to keep it. Thank you very much. See you next week.